All right, my real estate data nerds, it's time for my mid-year 2026 market update for the Triangle region of North Carolina. Now, let me lay it out for you high level. Inventory in the Triangle just hit its highest Q2 level since 2019. But buyers also came back this spring in a big way, and closed sales are up double digits year over year. And through it all, prices, well, you'll just have to keep watching to find out what happened with prices. So today, I'm diving into what it means for you to have more homes on the market and more buyer demand, depending on which side of the closing table you're on. And even if you aren't a numbers person, you'll definitely want to keep watching to see how the market around Raleigh, North Carolina has been performing this year, especially if you're a buyer looking for encouraging signs that maybe now is a great time to buy. But before I get into all that, my name is Matt Martin, and not only am I a Raleigh-based realtor, but I'm also a transplant to the region, originally from New York and LA. I've helped tons of clients, just like you, do exactly what we did back in 2021 and relocate to the Triangle region. So if you're looking to do the same, I'd love to help you too. All right. Quick methodology note. For these updates, I always just look at single family homes across the 5 main counties of the Triangle region: Wake, Durham, Chatham, Orange, and Johnston. But stay tuned until the end of the video if you want my quick take on the townhome and condo market, because it's operating in a world all its own. Now, I'd usually start these videos with where prices stand, since that's always what people are most curious about. But I'm actually gonna save that until near the end, because everything I'm gonna dive into first will help explain what's happening with prices. So instead, I'm gonna start with the supply side of things. In other words, how many homes do we have for sale, since inventory has continued its steady climb? So let's just start with the numbers. Q2 2026 saw 9,200 new listings hit the market, which is up 29.6% compared to last quarter, which isn't actually surprising, since March through June represent the busy spring season when everyone is coming out of hibernation, flowers are blooming, and homes are starting to look picture-worthy again. So we typically see a large jump from Q1 to Q2. But what is noteworthy is that new inventory this quarter was up 5.2% year over year. And our year-to-date total of over 16,300 new listings is also up 6.7% compared to where we were at this point last year. In fact, we're at our highest year-to-date new listings number since June of 2020, which is when COVID shut the entire world down. So sellers are back and they're listing their homes in the highest numbers we've seen in years. But what good are new listings if they don't stay on the market? So let's look at how many of those listings actually remained on the market at the end of June. We ended the quarter with 6,066 active listings, which is up 25.1% from Q1 and 8.7% higher than June of last year. And that 6,066 figure is actually the highest active inventory level we've seen in Q2 since June of 2019. Now, we're still not fully back to pre-COVID days where the second quarter would regularly average around 7,000 active homes, but inventory is recovering fast. So it's a win for buyers that sellers are listing again. And with over 6,000 active listings as of the end of Q2, it means buyers have a lot of options out there. But sellers listing their homes isn't the full story. Why else is active inventory surging? Well, let's jump into talking about demand, or in other words, are buyers buying? So one of the best ways of determining demand is by looking at total closed sales. In Q2 2026, we had 6,516 closings, which is up a massive 60% compared to a slow first quarter, and up 11.3% year over year. Then year to date, closed sales are sitting at 10,589, which is up 7.8% compared to the first half of 2025. And it's actually the highest number we've seen in the last 3 years. So does this mean that buyers came roaring back? Yes and no. See, on the one hand, buyers definitely jumped off the sidelines this spring to take advantage of the record-breaking number of new listings we saw. They finally felt like they had options to choose from, and more options typically means more interest. But remember what I just said in the last section. We had over 9,200 new listings hit the market in Q2 against just over 6,500 closings. So new listings are far outpacing closing, which explains why active inventory keeps piling up month after month. So buyers are back at the highest number in a few years, but still not enough to gobble up all the new listings. And why? Well, if you know me, you probably know where this is going, and I'm about to talk about the US Consumer Confidence Index, which measures things like consumer buying intentions, inflation, and expectations for interest rates. And the latest July report just dropped, and it perfectly explains what we're seeing. Overall, consumer confidence actually ticked down slightly for the third month in a row because inflation is still weighing heavily on people, especially with food and grocery prices remaining high. And then get this, over 61% of consumers are still bracing for interest rates to go up over the next 12 months. But despite those fears, the index showed that home buying expectations actually continued on an upward trend. So basically, buyers are nervous about the overall economy and their day-to-day costs, but they still actively want to buy a house. This means they aren't sitting on the sidelines completely anymore, but they also aren't chasing anything and everything that comes out. They're buying very selectively. Okay, so inventory is at a multi-year high, and while demand picked up, buyers stayed selective. So you can probably guess what that means for how competitive the market has become for buyers. And we measure competition with two metrics: days on market and sale versus list price. In other words, how long are properties sitting before going under contract, and how much are they selling for versus their asking price? And for both of these metrics, I actually strip out new construction homes for reasons that are a bit too nuanced to get into in this video, but feel free to drop me a line and I'm happy to explain. All right, so the numbers. In Q2 of 2026, days on market for single family resale homes dropped to 13 days, down from 31 days last quarter. Now, that may sound like a crazy change, but it's actually pretty in line with what we usually see between winter and spring, so I wouldn't read too much into that. But what is more telling is when you look year over year, 13 days on market is actually up from 10 days in Q2 2025 and 7 days in Q2 of 2024. And in fact, 13 days is the slowest Q2 pace we've seen in an entire decade, since June of 2025. So buyers in this market have a bit more time to make a decision and more options to choose from. And then the other metric, sale versus list price, gives even more positive news for buyers, as Q2 showed an average discount of 1% off list price. Now, this might not sound like much, but it's actually the largest average discount we've seen in a second quarter in over a decade. And when you look back to recent years where homes were going for 3 to 5% over asking, really any discount is good news for buyers. And to put it into real dollars, on a $500,000 listing, that's roughly $5,000 of built-in negotiating room that simply didn't exist a couple years ago. So buyers are getting more time to make decisions about properties, and they were able to negotiate more this quarter than in any spring in a decade. That's all great news if you're a buyer. All right, so inventory is up, demand is steady but choosy, and we're seeing more discounts than we've seen in years. So that must mean that prices came crashing down, right? Not so fast. You see, the single median family home price across the triangle as of Q2 2026 was $508,000. Compared to Q1's median of $480,000, that's up 5.8%, but that's actually a pretty standard seasonal bump between winter and spring. But The bigger story is that year-over-year median prices are pretty much flat, coming down just 0.4% compared to Q2 of 2025. And yes, this marks the second year in a row where Q2 has shown essentially flat to negative year-over-year price growth. But we're not talking big numbers here. Q2 prices peaked in 2024 at $516,000, so we're only down about 1.5% from then. This tells me something really important. Sellers' expectations are finally being forced to align with market realities. The Triangle market has essentially found a price ceiling around that $510,000 to $515,000 mark, and sellers can no longer count on automatic year-over-year appreciation to bail out an ambitious asking price. They're taking discounts, but they're also realizing that pricing too high from the get-go will just turn buyers away completely. So, what do I expect as we head into the second half of 2026? Seasonal activity typically tapers off after summer, and with active inventory sitting above 6,000 homes, buyers are heading into the second half of the year with more leverage and more choices than they've had in years. And with no sign of interest rates coming down, I don't think we're gonna see a massive influx of buyers into the market. So I think that means we'll continue to see great opportunities for buyers, both in terms of inventory selection and negotiability. And during this period of buyer selectivity, sellers are gonna have to align themselves with reality and do two things to ensure their homes sell. First, they have to price them right from the beginning based on recent comps. And then number two, they have to make their house the prettiest on the block to remove any doubts in a buyer's mind. And for sellers who get this, homes will continue to sell, and we may even see a bidding war here and there. But for sellers who don't, that 13 days on market will more likely be a dream scenario than a median reality. Now, I mentioned at the top of this video that condos and townhomes have been operating in a world of their own, so I think it's important to call them out separately. I'm not gonna get into all the same level of nitty-gritty, but here's the high level. Since February of 2022, townhome and condo listings have been on the rise, and active inventory, wait for this, has ballooned from just over 600 properties to over 2,300 properties in June of this year. That's nearly a four-fold increase in inventory, and it's been driven by a record low number of closings in that market over the same period of time. I'll get into my theory as to why in just a minute, but because there's so much inventory sitting, it almost goes without saying that days on market are significantly higher in the townhome and condo sector versus single family homes. In fact, it's exactly double at 26 days. And then you can probably guess what that means for buyer negotiability as well. The average discount off list price in Q2 2026 was 1.7%, which is $6,800 on a $400,000 asking price. That is a huge discount. Then as for prices, condo and townhome prices have been on a steady decline since June of 2022, dropping from a median of $370,000 to just $349,000 in Q2 of this year, which is over a 5.5% drop. That's pretty significant. So what's happening? Well, we've seen a massive explosion in apartment construction here in the Triangle, and that's led to rents actually coming down over the past couple years. And the buyer pool for condos and townhomes often overlaps with those renting apartments. So my theory is that the math just doesn't make sense for a would-be buyer to leave a great amenity-rich apartment with a rent payment that's likely less than what their mortgage payment would be. And the landlord takes care of everything for you. Those buyers are now staying put, saving up money while they rent to be able to buy a single family home where they don't have to share walls. So that's your market update for June of 2026. What stood out to you the most? Let me know in the comments below. And if you're ready to take advantage of more inventory and reduced competition, and you want to kick off your house hunt in the Triangle region of North Carolina, I'd love to be your guide. You can reach me by phone, email, or text, and you can find all my contact information in the link below or by scanning this QR code right here with your phone. And if you liked this video, I have a whole catalog of others all about moving to, living in, and buying real estate in and around Raleigh, North Carolina. Here's another one you may like, so give it a click to keep on watching.